Hello everyone, my name is Stanislav Bernikov. I'm a senior trading specialist at Exness, and in this video I will share with you the fresh idea for this week which might be potentially interesting for trading. Before we proceed to the idea, let me share with you the results of the previous week's idea. The previous week's idea was a potential buy for Bitcoin, which was positioned at the dynamic support level and was supposed to reach the 30,000 level. So the idea was completely correct and the target was achieved for the same day of the publication. Now let's switch to this week's idea. This week's idea is potential buy for gold. So as you see, gold had broken out the triangular formation, and yesterday there was a notable buying activity for gold. Also, the position of the gold is close to the 20-day moving average, which gives a trade location which is potentially interesting for buying. Gold is driven by some uncertainty around banks and the banking sector in the United States, so it's sensitively reacting on any uncertainty and particularly on the liquidity crisis, which is around the corner. At least trade is afraid of that. So with that, of course, we see that we can see the continuation for the upcoming couple of days until gold reaches the point of 2050, 2045, which is the height of the previous triangular formation. That's known as a symmetrical target or symmetrical move. Now let's talk about some narratives which might help this idea to play in the right direction. So first of all, we see the uncertainty about banks and the banking crisis. JP Morgan got a deal for First Republic not so long ago, a couple of days ago, but markets didn't like this actually. We see the plummeting Nasdaq, tech stocks, and S&P 500 was moving down quite substantially within a day, along with gold rising. So gold reacted positively as a protection asset. Also, we see that CDS, which are credit default swaps for Bank of America, the largest institution in the US, had reached the previous high, which was achieved in the previous year, 2022. So 110 is pretty high number for CDS, for credit default swaps, displaying the potential fear around the banking stocks. The overall market fear remains to be low. The VIX is around 17, 18, which is perceived as a low number, but particularly financial stocks are under pressure and they create some liquidity issues. What other news or potential publications might affect this idea during the week? So first of all, of course, this is a publication of interest rate later on Wednesday, and a press conference of Fed, which is scheduled 30 minutes after this publication. Normally, markets pretty accurately predict the interest rate itself. This time it's going to be one-step hike for 5.25%, but the press conference can create volatility because investors are looking forward and they want to hear some tone from Fed, hawkish, dovish, or neutral. So they will be carefully monitoring what Jay Powell says, and usually whenever he says something unusual or maybe extremely hawkish or dovish, markets react with extreme volatility. So be prepared for that. Volatility may be extremely high during press conference, so don't forget about that. So in a nutshell, totally, we have the idea for gold, which had broken through the upper ceiling of the triangle, skyrocketing from the support level of 20-day moving average. It is driven by uncertainty around financial stocks and around liquidity in the United States. Also, softening of the monetary policy in the US helps some cyclical assets such as gold and other metals to go up. However, monitor for press conference of Jerome Powell and potentially labor market publications on Friday. This is non-farm payrolls and unemployment. So don't forget, this is just the idea, do your own research, and never forget to manage risk.